in
I think the
February.
momentum is to the upside. I mean, there's no momentum to the downside. Yes, we had about a week or so where prices really spiked up for gold and silver, more so for silver than gold, but gold got above 5,500 very quickly, and silver got above 120, and they both pulled back, but gold has found support around 5,000, which is still a pretty high number compared to where we were, not necessarily compared to where we're going. And silver really has a lot of strong support in the low 70s. But there's been a pickup in the volatility of silver, but the trend is clearly up, and we're trading at 87.5 right now. And more significantly for silver, we broke through that $50 double top that really overhung the market since 1980. And so I think the chart looks phenomenal for silver. I think silver is going to take out the high of 121. But in the meantime, I think the mining stocks are a good forward-looking indicator. Now, a lot of those stocks have made new highs already, even though gold and silver are still considerably below the highs they set in January. So I think it's just a big bull market, and we got a long way to go.
So are the mining stocks kind of the canary in the coal mine here? Are they the leading indicator for what's to come later on for the metals? Because
they haven't been for a while because they've kind of been wrong. The miners have been anticipating a big drop in precious metals prices for years. That hasn't really happened. But now I think that investors are starting to accept the fact that gold and silver aren't going to crash. And pretty soon they're going to accept the fact that they're going to keep going up. But just realizing that they're not going to crash is a big step because that's an acknowledgement of how cheap these mining stocks are. So money is flowing in there. But this is still early days in both central bank readopting gold in place of the dollar. That really started a couple of years ago where you really started to see a lot of central banks moving into gold. And I think the trend of retail investors and private institutions moving into gold just started probably this year. And that may be why you saw that initial spike earlier in the year. As we saw private investors for the first time in decades allocating something to the precious metals as opposed to allocating nothing. So I think we're still early in these trends. And so prices have a long way to rise.
Yeah, you contrast that with the S&P, which is what we have over here. And it looks like, I don't know if you can see the screen from where you're at, Peter, but it looks like the S&P has kind of like formed this arc. And it looks like we've already hit the inflection point and we're coming down on the other side of this arc here. Do you see what I'm seeing here?
Yeah. And well, if you price the S&P in gold, you'll see an even more bearish picture as far as how poorly it's performed over the last 25 years.
Yeah, there it is. It's not.
Yeah. And so, I mean, look at that chart. Where does that look like it's going?
Yeah, this is on a log scale. So if we just look at it from a linear scale, the big top over here that you see,
that's probably 2000.
Yeah, that's 2000. And we've been on a downside swing here for a few years.
Yep.
Since 2021.
And we're going lower.
So what does it mean, Peter, when gold outperforms the S&P? And it's not just gold, but you're also seeing it in the emerging markets as well. I mean, we could pull up the emerging markets ETF and look at that, but that's outperforming the S&P. That's outperforming the Dow. That's outperforming the NASDAQ.
Well, not just emerging markets, all foreign markets, developed markets. Look at Europe. Look at Asia. Look at all of these developed markets are beating the S&P considerably since Trump was elected. All of last year and so far this year, you know, like you could look at my foreign dividend paying fund, which is we invest in foreign dividend paying stocks. So pretty much, you know, a lot of basic low vol, high yielding equities. And that strategy and that fund returned 62% last year. And it's already up better than 15% this year, which, you know, last year it was more than triple the S&P. And this time it's like 15x the S&P because the S&P is flat.
Peter Schiff says silver broke 1980 resistance. Gold above $5,200 is just the start. Mining stocks signal higher prices. Foreign markets crush S&P. Bitcoin is imploding. Dollar breaking down against Swiss franc. Trump's inflation lies mean Republicans lose midterms. Buy gold, silver, and miners now.
I think there's no question that the Fed can cut short rates if it wants to cut them.
But what about
But it
the long
doesn't
end?
mean that the longer end of the market is going to cooperate. In order to move the longer end, they're going to have to step up quantitative easing, which is something that Kevin Walsh has come out, at least in the past, and said he was against. Although I'm sure he's for it now, or Trump wouldn't have picked him. But all that's going to backfire. But the fact that Trump, said, and it wasn't the first time he said it at the State of the Union. He already talked about it. But the fact that his goal, and it's not just keeping home prices from falling, he wants them to keep rising. Yet at the same time, he wants to do something about the affordability problem because homes are already so overpriced that people can't afford them. And rather than allowing the prices to go down, which is the free market solution, he wants to keep the prices high and artificially manipulate interest rates down so that people can borrow more money to overpay for homes. That is a horrible economic policy. It has all sorts of negative consequences, but one of them is a weaker dollar and higher inflation. And that is also what's driving money out of U.S. assets into emerging markets and other foreign markets and gold.
It seems like they may get interest rates lower by one of two reasons. Number one, either they create a recession, or we enter a recession and capital flies into bonds momentarily, and that lowers the interest rates, or they just do, like you said, quantitative easing, and they just buy up the bonds themselves. In the latter scenario, that would portend to much higher gold and silver prices if they do quantitative easing. In the former scenario, if we enter a recession, what does that mean for the metals?
Well, the metals are going up regardless, right? If we're in a recession, they're going to print more money and they're going to cut rates, which is going to be good for gold. But even if we're not in a recession, inflation's still going to go higher. They're not going to hike rates. And so that's going to be good for gold too. I mean, real interest rates are going to go down regardless because the Fed is not going to raise rates no matter what. Obviously, if they start cutting rates, it's even more bullish for gold.
Right. And let's go ahead and take a look at the Bitcoin price as well. You mentioned Bitcoin. Bitcoin is still range bound between $60,000 and below, the lower bound is 60,000. Gold has been outperforming Bitcoin. Now, Bitcoin can be said to be a proxy for the NASDAQ and the growth sector. The fact that Bitcoin is kind of taking the lead here ahead of the NASDAQ, is this a sign of what's to come to the NASDAQ? Is the NASDAQ stay tied to Bitcoin?
Yeah, and you could put up a chart of Bitcoin priced in gold and get a picture of how poorly Bitcoin's performed over the last 4.5 years or so in terms of gold, and look at where it is in relationship to its high, which was back in 2021, really was the high for Bitcoin, despite all of the promotion and hyping, from Wall Street and the Trump administration. But I think it's you're learning two things about Bitcoin if you didn't know it. One is that it's not digital gold. It's nothing like gold. It's not a digital version of gold. And so it doesn't perform like gold. And so if you want gold, you don't buy Bitcoin as a gold proxy. You don't buy Bitcoin because it's some supercharged version of gold that's going to do even better than gold. It has zero correlation with gold, and it's got nothing to do with it. So if you're worried about the dollar, you're worried about inflation, you want to hedge, you can buy gold. You don't buy Bitcoin. Bitcoin is a completely different animal. So what is Bitcoin? It's just a highly speculative asset that people buy when they want to take risk, and they think risk assets are going to go up, so they put money into Bitcoin. The fact that Bitcoin is falling now could easily be a precursor that the appetite for risk is diminishing, and potentially you're going to see something happen in the broader market for assets that are less risky than Bitcoin, but are still reasonably risky. right? These might be AI stocks or stuff like that. So this could be a harbinger of some bad things to come. Or it could simply mean that people are waking up from their delusion that Bitcoin has any value, which it doesn't. The whole thing is just a Ponzi, a pyramid scheme, whatever you want to call it. But I think, the bottom is about to drop out. The amazing thing to me is that Bitcoin is still above 60,000. So any day now, I think the bottom's going to drop out and it's going to implode. So you're really pressing your luck if you're holding on to it. Yeah, I mean, you're definitely seeing, I think, some money rotating out of Bitcoin either into other risk assets or into gold as a safe haven. People want to take less risk and they want something more stable. So I think that's happening with crypto, and I think that is going to accelerate. I think there's a lot more people who own Bitcoin that need to get out than people who don't own it who want to buy. I mean, I think that most of the buyers are already in. I don't know that they're going to con any more people, or at least not enough new people are going to be coming into Bitcoin to accommodate the money that wants to come out of Bitcoin.
How do you assess the sentiment in the metal space? Gold is even closer to its all-time high too.
People have pretty much been bearish the whole way up, particularly, the institutional investors. Retail investors probably were, oblivious to metals. They didn't even, notice them. But I think when silver did spike up to above 120 and then had that big drop of, basically a third, the media focused on the drop and not the preceding rise. Like, oh, see, it's over. It was a bubble. Look out. It's going to crash. And so I think a lot of people got scared. Either they got scared out of the market or they got scared out of entering the market. And so I think the sentiment turned very quickly, which is kind of what happens in bull markets and what these shakeouts do. And I think now we've got clear sailing to make new highs as, people are more worried about the market going down and there's more fear in the market than greed. Well, I think it will break support. I think the dollar is headed a lot lower. In fact, if you zoom out on that chart, you'll see that the lows were in just before the 2008 financial crisis. Mm-hmm. And I think we're going to take out those lows. And in fact, if you put up a chart between the dollar and the Swiss franc, the dollar has already taken out its lows versus the Swiss franc. So the dollar's at an all-time record low against that one currency. And so I think the Swiss franc is a leading indicator of where the dollar is going against other currencies. Those currencies are not as strong as the franc, but they're going to be stronger than the dollar.
And so if you were Trump's advisor, if you were like his economic advisor, what would be some of the things you would tell him?
Well, I would tell him that his whole plan is bad. He's got to start from scratch. He's got it all wrong. The tariffs are a mistake. The big, beautiful bill was a disaster. His economic policies have been completely wrong. They're undermining the economy. They're just designed to put more air into the bubble. They're not designed to make America great again. They're just contributing to the ultimate crisis that we're headed for. So it's we'd have to pretty much do the opposite of what he's been doing so far.
How would you rewrite his policy? Just like a few key points.
Well, we need to have massive cuts in government spending, number one. And that includes entitlements that he has promised never to touch, like Social Security, Medicare, Medicaid, the Affordable Care Act. We also need significant reductions in military spending. And we need to get rid of a lot of government programs that we don't need and that we'd be better off without, like all the agricultural subsidies.